Hello and welcome to this Praxis Technologies presentation on Treasury evolution. Today we'll take a look at the changing landscape, some of the challenges faced by today's Treasurer, and a few of the solutions available to address those challenges. The global financial crisis highlighted a few systemic problems in finance. This has not only had an effect on bank treasuries through the stricter controls and regulations that have been imposed on the banks, but has permeated corporate treasuries, resulting in greater demands placed on the corporate treasurer. These demands mean that the corporate treasurer needs to lower the risk while still delivering the same expected results and growth as were expected in the past, effectively doing more with less. Technologies such as SWIFT and corporate in-house bank structures do exist, but they're still relatively new and not very well understood. Now, these technologies can provide the answer to some of these challenges, but we'll look at that later on in the presentation. First, let's take a look at how Treasury has actually changed. Treasury used to be reasonably straightforward. Treasurers would manage and forecast cash positions, apply hedging and other strategies that were set out as part of the company's risk management policies. Back office would take care of the detail, and everybody would understand that the process simply took time. The Treasurer today not only has to worry about the cash positions and the forecasting, but needs to get as much out of the available liquidity as possible. This is also under increased regulatory and reporting environments, with greater accountability and more strategic involvement. This may have raised the profile of the Treasurer, but also added the extra pressure on increasing the efficiency and the visibility across the entire back office operation. So Treasury is no longer simply a point of control for operations, but a strategic partner that the board looks to maximise the organisation's profits through the solid financial management that it provides. Taking a closer look at the key functions today's Treasurer needs to deal with, we can break them down into four main objectives: to optimise liquidity, risk reporting and visibility, strategic engagement, and operational efficiency. These objectives create some challenges. We see issues in how embedded manual processes hinder the data flow. There's also a lack of people with the necessary skills to be able to drive the change that's needed. The complexity of the organisation itself, with multiple departments, banks, accounts, platforms, business relationships, etc., further compound the challenges, and all of these come down to create a lack of visibility and transparency through the organisation's operations. Looking at this, we see a fairly big list of challenges, which at first glance seem insurmountable when you look at it as a whole, but they become more manageable if you break the problem down into categories and look at the problem in terms of what technology can bring to the table. So we can look at it in terms of centralization, standardization, and connectivity. Connectivity can help with a number of these challenges and brings forward the foundation of what the following solutions are built on. Standardization allows an organization to basically talk the same language. Centralization means that the organization starts to work together through a single common platform. And finally, the technology capitalizes on the benefits to bring the operation together into one cohesive, real-time, aware organization as an entity. Bringing this together with our earlier view of old Treasury transition into a new Treasury, we can put our key factors on a scale of evolution of capability. We can look at this as a journey where each phase allows greater capability. On the left hand, we have the old Treasury with the common bank channels that banks provide for connectivity. Evolving our connectivity allows us to automate those channels both internally and externally. Connectivity then through networks such as SWIFT allows us to become even more bank agnostic and adopt ISO standards. These are the same kind of standards that the banks themselves use for connectivity, which in turn allows us complete standardization of data and process. This opens the possibility for centralization and allows functions such as shared service centers and payments gateways to become possible. Further application of the technology opens up more advanced capabilities such as pay on behalf of or receive on behalf of methods, multilateral netting, and eventually being able to run virtual bank account structures under a full corporate in-house bank model. Just as a side point, and to give you an indication of where most corporate treasuries are on this scale, Globally, there are only about 1,500 organizations that are connected to SWIFT. This is an important point as we see the connectivity of your banks through the SWIFT network as the line in the sand between what is considered an advanced Treasury setup and a basic Treasury setup. The point about SWIFT connectivity being a milestone is interesting. Connectivity is really fundamental to an advanced Treasury. Addressing the connectivity problem solves the issues around being tied into a proprietary interface provided by a single bank, or worse still, having multiple proprietary interfaces, which puts a significant load on your IT department. Once a channel such as SWIFT is being used and you are using the associated message standards, as in the ISO 20022 and ISO 15022 standards, then you can start to standardize the rest of your internal systems to leverage that common technology platform. Now, this has a big impact on the complexity of your IT, and it translates directly into IT cost, time and resource savings. Centralization probably has the biggest impact on your business operation, whereas the connectivity and standardization pieces deal more with the technical side that your IT department will gain most benefit from. Centralization impacts your business. Through centralization, you can start to see the benefits of the process improvements, visibility across the data, the speed at which you can access your data, and many other aspects that save time and money in your daily operation. And finally, the technology, which is involved in all the above but goes a little bit further. Once you have the connectivity, standardization and centralization in place, you can really start to capitalize on the technology application itself, where more advanced functions and automations become possible. This is where you can start adding techniques such as multilateral netting to reduce your FX and transactional costs, or reduce debt positions through automated intercompany lending. Our model of using in-house banking techniques indicates savings on the overall cost of banking for a typical large corporate organization to be at around 50%. The role of the corporate treasurer has changed a lot, especially in recent years, but so have the systems available to support that change. Going from a basic to an advanced treasury setup may appear to be daunting when you look at the long list of challenges, but when the challenges are broken down into definable steps, the transition from effectively what is a spreadsheet to an in-house banking system becomes manageable. And you don't have to do the entire change in one hit. You can treat it as a step-by-step journey, where you start with a SWIFT connection and you build out standardization, connectivity, and the technology. At Praxis Technologies, we help our customers through that journey from the basic SWIFT connectivity to full corporate in-house banking solutions. If you would like more information on this presentation or what we do at Praxis Technologies, please feel free to contact us. You can also download our in-house banking discussion paper from our website. And thank you very much for your time.